Good afternoon. Welcome to Options Tender. We're going to take a look at SPY on multiple time frames. We're going to go through some indicators. I'm going to show you on the 65, one of my indicators that I use on there as well, that I don't usually show on this program. So if you're new here, go down to that bottom right hand corner, hit that Options Center logo and subscribe. We're going to check out why I think we're hitting the top in the market. That's such a big deal. We're into time. I think the high is in. I did say that once before. We had two timings on the weekly cycles, where we had a weekly time relationship, not yesterday, but the Friday before that week specifically, and last week. So I'll say it this week. Meaning that it's Saturday right now, so it's still the same week. Okay, this trading week. And both of those hit. I was wrong on the first one, clearly a little early, got a little bit higher, and then just formed more negative divergence. So that's what I'm going to show you. We're going to work our way down on a higher time frame down to the 65. Okay, so let's jump into it. We have SPY on the monthly time frame. Just in a traditional sense, I match up traditional technical analysis. This is a bearish rising wedge with these very traditional indicators: MACD, RSI, slow stoch. We have negative divergence on the MACD, or equal peaks, class B negative divergence. And then we have a 3-peak negative divergence in the RSI. Slow stoch hasn't turned over yet, clearly because price action has not either. So we'll be looking for, on this long-term chart, for this to curl over and to get a sell signal. Okay, so we have those negative divergences forming on that time frame. Let's see if we can get the DMARC exhaustion has formed. So we have the 9 count here. It's a 13-9. You can even argue that this is a 9-13-9 sell signal. And yes, price did go higher. That does happen. This one we had 2 months afterwards go higher. This one we have 2 months so far higher after that. Okay, this is giving us a signal that there is some exhaustion in the market. And then preceding that, you have your correction. So I see this coming up really soon here. What we're doing is, in my opinion, is this was the last gasp here with the wedge in itself. Okay, we had a large wedge and then a smaller wedge form for an ending diagonal that has concluded as of last week. Do I have confirmation of that? No. Will we be looking for it? Yes. Am I trading this to the downside? Yes. I'm giving myself plenty of time all the way out to January for these options to start occurring. And yes, they're in the money reverse ETFs plus several different time expirations on other short plays. Okay. So that's the style of trading that I do. I hit these reversals. I look for, opportunities to hedge, very similar to when TSM semiconductors had, Taiwan Semiconductors had their earnings that day, had a brilliant, actually made money on the upside, while my swings to the downside held their own. And that's my style trading. So with this analysis, I want you to take your style of trading and match it up if you're using my analysis. Okay, so I don't want to get you on the wrong side. Just know that my style is I'm a swing trader, and then I have trades within those swings. Okay, let's go to see if I have anything on the Elliott. I have most of it on SPX. So just in the long run, I don't have anything really on this chart. I'm just looking for retracements. As soon as we get a confirmation of a top, I'll line that up here, and then we'll be looking for a retracement over many months to years down to the 62% would be just a regular. I'm not going to go through all the big picture, but we'd be looking for the 62% retracement eventually. Okay, so let's go to the weekly. And on the weekly time frame, we're getting this trend line from the 2021 top here, and we're forming a top. Clearly, we're over that we're overthrowing that trend line, so that'll be something to watch. Now we have this trend line up here that we're retesting as of last week, and what we're looking for is a reversal underneath this candle here now that we're into resistance. So yes, we are in a bullish posture. We have the 8 EMA, so the momentum's up. 20 moving average, that's our trend indicator. So some are going to ask, well, why are you shorting the market? Because we're getting to a top. I am trading a top. Is that a fool's game? Maybe, but it's my game. So we look at some of the oscillators. We have a peak, another peak, and another peak, a 3 peak. Okay, negative divergence on the MACD, negative divergence on the RSI, going into resistance. And the slow stoke, we're still looking for an early turn on that, so which has not occurred yet. Anything on the D mark? 13, 9, 13, 9, 9, 13 sell. And then we're still going higher. Nothing quite here. We have a 9. We have a 9 there as well. Awesome oscillator. Same thing. Negative divergence all the way across. And these don't form divergences very often. Okay. This one didn't even get a divergence on this peak here. 3 peak divergence on the awesome oscillator. That's just a huge sign of incoming reversal. So be cautious if you're long. Let's change up the point of view here. Okay, so we had this retracement back here in 21, that peak at the trend line, and that's how we got our targets from that. So we had our retracements, price went through all the retracements, and then made a new high, all-time high. And now we have our targets at 127. That was our first target, traded around it, finally got above, and tested that spot, went back up. We had our targets hit twice here, 3 times at 162, got above it. So again, we're in this predicament where the price is above the 561. It's above our target here. So it's in a bullish stance. I understand that. Okay, so we're looking for a reversal. It may never happen, and I can just be wrong. Okay, wrong. I know that a lot of people are saying that to me, and that's fine, because I've done this many of times. So I will continue to trade my style, and then I'll be looking for a reversal. The only time relationship I have on this chart coming up is 1229, the weekly time frame. And it's, remember, when you have a time relationship, it's the week of 1229. Okay, we had 2 relationships last week, and this week and last week we had a time relationship. So we had a what I thought was a top here. We didn't show any reversal signs here, but we have a possible reversal candle right here. So going to the daily. All right, on the daily traditional sense, here is our potential channel from this lower high right here. Get a low here, low here. Then we have a high from the overthrow from this bearish rising wedge. So we had a lot of confluence going there, rejected off of it. Okay, we back tested that wedge and then started to form a separate wedge, a secondary wedge that made new highs here. All right, I'm gonna dig in just a little bit more. With this wedge here, and we can draw another line here, you're gonna see on the 65 much better. We are at the top of it again. So right here. In my opinion, this is an A, B, C. Okay, because the reason why that is because this whole last move was an ending diagonal, in my opinion. So we're back at the top of this smaller wedge in confluence with also that old channel there. Rejected off it, back, rejected again, and we're back right on it with a Harami. So you can bull, bear, Harami. We won't know until after the price action occurs. Can we go up just a little bit higher to break out a new high? Of course, right? I can't control that. But it's just going to form another divergence there as well. So on the indicators, let me move over a little so you can see all of it. We have bearish divergence. Made a peak, divergence, divergence, all the way here. So the last couple weeks, and made another divergence on the daily. This is going to play out. Again, on the RSI, it's getting weaker, 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 weaker. Slow Stoke already have a sell signal. We have a sell signal on the daily time frame that's going to leak into the weekly and into the monthly. Okay, all of those are going to play out. It's just like a domino. Anything awesome oscillator, just getting to the same peaks here, equal peaks. DMARC, oh, look at that. We just got a 9 count as of Friday. So another 9 count here. Again, we can get a candle or two above it. I don't think that's really going to happen. We could have 1 or 2, but again, looking for reversal imminent. Another sell signal, or at least exhaustion. Okay, this is the formation that we've been watching. Just an expanding wedge here. Now this is the ending diagonal that I was talking about. After wave 4, you have 5 waves, all made of 3 waves apiece. A, B, C for 1, A, B, C 2, A, B, C 3, A, B, C 4, and then A, B, C 5. Okay, all following this trend line right here. Back up to the trend line, we're at resistance. Can we inch out a point or two? Sure, absolutely. But it's getting to the end of its move. Here is our time and price. We have the 1, 2, 3, 4, 5. I know it's a little bit different. We're trying to work it out over time. More like that. 1, 2, 3, 4, 5. Okay. Now, I erased it already. We had a possible top here and a possible top here. So I'm moving my relationships over because we had another top. Let me do that. And then if we do eke out just another new high here, then we'll adjust these time ratios again. That's what forms these clusters where we have potential reversals for trades. Okay, so assuming we had a new top here at the 138% retracement, where do I get that? From wave 3 to 4, we have our retracement tool. If you're not familiar, in Thinkorswim, it looks like this. And so you have all the retracements in between up to 100%. And then after it makes a new high, it held the new high. And we knew then that we were likely to go to the 127. Got there, that's our first major. Held the 127 that's the 580 mark here, and hit the next minor target at 138. So if it does go higher, if price does go higher and holds over 586 as minor, we have 2 more targets after that. Another minor at 150% retracement, and then a major here at the 162. So going into price and time, if we have these clusters and we get to price at one of these certain times, we'll be looking for another reversal. So going into next week, we have turnaround Tuesday. So do we go higher into 1023, this cluster right here? is that if we're up higher, we'll be looking for another objective short. Now, if we just hold or go lower, we'll hedge to the upside, assuming that would be a low. I have this arrow pointed out here because I do suspect if the high is in, that we'll see a impulsive wave to the downside. That could go all the way down to test these lows here at minimum these lows here at 540. And yes, it's going to take some time. So we have time relationships out to, we have some clusters out here to 11, 12 to December or so. And then we should have some sort of Santa Claus rally after that. So that's kind of what we're projecting. I'll keep this on here so we can kind of, as we do these videos each and every day, we'll compare what's going on here and adjust them as necessary. All right. So, and then it's not a straight shot. What we'll be looking for is a 5-wave impulse move down. So we should have a nice quick move here coming up into next week. We should have a nice move, perhaps down to the 565, get a bounce, maybe even a sharp bounce. Just depends. It could go back to the 60% and then again lower for a bigger move. I'll wait for, waste some time, and then down to our bottom. And again, this could be as low as here. It could be further, depending on what's going on, what kind of catalysts that come up. Let's go to the 65. And we'll take a look at this on a traditional sense. Okay, now this shows a good view of, first of all, somebody had mentioned that we were extremely bearish in our Discord, and I was mentioning, some bearishness way up here. All right, that we had a possibility at the 580. That's when I started turning bearish, right here, 580. Okay, this, we already knew that we had a setup going higher. So I've been bullish all the way down here. I actually got bullish early, and that's my fault. But we quickly, after this move here, saw the reversal action, price action happening. Okay, so then we had a breakout, pullback, bullish. Go back and look at the videos. Bullish all the way through. We saw an inverse head and shoulder setup here. I don't think that full setup is going to play out, but we set our target, mentioned over and over. Our target was 580. All right, so we're at the top. We called a top right here at 580, was wrong, and throughout the week have moved up 5 whole points, 6 points. Didn't end there, but so this is how wrong I was right here. All right, so we'll see what happens coming up. You have, again, on this time frame, negative divergence, bearish rising wedge, divergence on every single time frame, negative, and even the last move there, negative divergence. And then when we look at the Qs, you'll see that even there's another way to do a negative divergence. SPY made a high here, Qs made a lower high. Okay, so be long at your own peril. Good luck. I hope that you make money on the long side if you continue to hold so. But after this breaks down, sure, given this breakdown, we'll see what the indicators say. After we have a breakdown, do we, do the indicators show positive divergence? We'll look into those things, and we'll give the point of view of going higher, making a new high, if we need to do so. We'll look at what the charts say. We'll look at what the oscillators say. So this is going to play out however this plays out. And then as we get some sort of pattern or positive divergence, we'll say, well, okay, well, maybe this could go higher at this point. But from all the evidence that we have so far, this is going to be a major correction. So we're going to look for impulse 5-wave move down into whatever our target ends up being, maybe the lows here. Okay, maybe lower. Looking at, well, you have the awesome oscillator again on the lower time frames. Negative divergence on that last high there. And nothing's played out yet. Okay, so if you're going long or staying long, you might get a point or two out of it. But we're gonna break this wedge soon. Going over to this other board. So again, this is where, all right, we had our correction from here, and then we had our retracements. Our first major retracement, 127.2, is a 580. That's where we hit it. That's where I called a high. I was wrong. Price gapped over, held it, and went to the next target. Okay? Does that happen again? Sure, absolutely. I think probability-wise, no. That's the game that we play, is probabilities. I'm looking for a reversal, so I'll look for this first impulse wave. Should be some sort of 1, 2, 3, 4, 5 wave down. Maybe going into one of these time and price references, and then these relationships, and then we'll look for a bounce, a sharp wave 2 zigzag, perhaps, or a flat pattern. If price gets above 586, manages to pull above there, and then it would be breaking out from the wedge, then the price target up above another minor price target at 592. Let's go to the Qs. On the Qs, we have the same looking chart, but a lower high. So instead of this being an ending diagonal up above, we have this as a bear flag. We have an impulse wave to the downside, meaning a 5-wave move. And then we have a correction. If you're bullish, what I think you're going to get out of this is probably just a high, maybe up here to 500. I don't think it's going to go any higher. If that happens, we're still at a lower high from the peak. It's a double top. We're already considering this a double top. So we have a triangle here forming. If this triangle breaks to the upside or downside, that will determine in the micro term of what's happening next. So we'll see what goes on there. As far as I'm concerned, you have the high, a 1-2 setup, and now a 1-2 setup, and then even a smaller 1-2 setup here. See how that goes. If we break out here, we have the 1-2, and then we'll be looking for the start of a market structure moving lower. At the indicators, peak, negative divergence, negative divergence. If we make a new high, we're just making another negative divergence over here. All right, so I'm not predicting the future that it can't make another 5-point move here. You know, exceed this peak by 1 point. So this was let's see here. This is where I called the top. I was wrong. Price gapped over and just gap and cracked. So far, I was wrong by 3 points. We missed out on 3 points there, and missed out only for a couple hours. Okay, a few hours. So calling peaks. I'm doing it. I am calling what my money is doing. Okay, My money is where my mouth is. If you have a different trading style, then I just hope you use this as a warning. And then as structure and levels break that confirm your analysis, your trading style, that hopefully this will give you at least warning to start to get out of some of your longs. Awesome oscillator, negative divergence in that micro term. Not looking pretty for the bulls. And hopefully, you know, you're bullish through this whole thing. We started being bullish down here, actually right here. I remember putting our first trade in to see if this would hold, because we had some positive divergence right here. And we got the move, and then it broke down, and we had to get out of our trades. Tried again here, broke down. That was not a great trade for us. We thought that was the first impulse wave, and that we were going to get a steep retracement from here. After this, I was bullish throughout this whole entire way until here. Okay, so I don't know who is in the Discord, maybe watched one video or just maybe even looked at the thumbnail and said, oh, this whole group's bearish, and the group is not bearish. All right, I hope they are now. I don't know what he's doing, but he can trade with this trend all he wants. Okay, so with IWM is the only one that I think could still go higher. Okay, if the market wants to continue higher, you have one possible point here where it could peak, but on the longer term, the peak could be here. We have a lower high at this point at the 786. This is good resistance. We get above 226, hold above 226, and then I think we could hit this 235, and then we'll move this peak over here. So this is what we were looking for early on, but IWM just did not give us the bullish move that we needed to hold the market up. Instead, it was a combination between rotation of the market going back and forth from the Qs to IWM. And of course, DIA, the Dow has completely just been straight up. So SMH is going to lead the market to the downside. It's going to lead tech. So we have our initial move, and we are bear flagging at this point. If you're bullish, your bullish argument would probably be some sort of ascending triangle. However you want to draw it, and maybe we already broke out and back testing and holding above and going higher. I'm not in that camp. This is a bear flag. Bear flag, fake break, if you want to draw it like that, and going lower. So I do think this is possibly, again, a 1-2 setup, just like on the Qs, but you can see a little bit deeper move. And again, we talked about in the videos after this move happened, you know, and we didn't get a retracement after that, so that's why I went long SMH into Taiwan Semiconductors, because I knew some sort of shenanigans would have happened, and so that protected a lot of our positions. A big move. I think it was like a almost probably a 4 times move on that gap up, and of course we got out immediately. So this is going to play out, and then we have a 1, impulse 1. It's down here somewhere. An A, B, C for wave 2, which I think is in. If not, still have some unfinished business at the 786, and that's where the gap starts. And then possibly a 1, 2 here. So 1, 2, 1, 2 setup right into the 62% retracement. And we'll see if we exceed that high, you know, probability starts to gain that you can go higher. but I'm not sure that that's going to go any higher than it is at 255. From there, we had our projections. We started making our projections. If this plays out and we don't get above this 255.84, then we're looking for the price target for wave 3 to go down to 228, 229. Okay, but this can play out different ways. I explained this on another video, but really quick, this could be, this could still be setting up a 1-2, and you can get, a 1-2. This still could form some market structure. It doesn't have to be a 1, 2, 3, 4, 5 perfect play out. This could be 1-2, 1-2, and so on for a bigger move than that if it needs to. This was a 1-2, 1-2 right here. All right, so it just didn't go, straight down one. It's a 1-2. You have market structure starting to form. You have equilibrium here, triangle, broke down. So now within these fractals, this looked like a wave. This looked like a wave 1 to us. Okay. But then we started to see that this was a 1-2, 1-2 as price, in hindsight. That's why Elliott wave is so speculative. After you get this 1-2, now we have a 1, 2, 3, 4, 5. All right. And then we have this structure that needs to play out, which is a wave 4 again and wave 5. All right. So that's an impulse wave to the downside. VIX got crushed on Friday. All right, but really all it did, I was hoping this channel would hold, but it actually broke down right here from the channel. It's just back testing this inverse head and shoulders. That's all. It's as simple as that, or this triangle. If you're drawing this as a triangle, we had this uptrend that held and this downtrend. Back testing. I think as little as Monday, we could even gap up and start moving higher. Now, why did the VIX break down so much if the market didn't really move anywhere? We had options expiration. We had the VIX expiration happened on, I think it was Wednesday. Let's look here. So if you don't follow futures, you're not getting a complete story on the indices and on VIX and such. Well, we had a VIX expiration here on Tuesday night here. All right, after VIX looks like it was going up, looked like things were getting nasty here, and price would start falling on the market. Well, Wednesday we had a gap down, so we're here at 21 on Wednesday. Why do I bring this up? Because we have the VIX on Wednesday was starting off maybe about, I think it was Tuesday, Wednesday, same kind of thing. It started to go up, rejected off here at the 20. So when price gapped down on Wednesday, the VIX had to follow. They usually come together. That's what I'm getting at. The VIX either goes down to the futures, or the futures go up to the VIX. Over time, they come back together to join. So, sorry, this is kind of choppy. So this gap down on Wednesday, down to 19, and then the VIX. This is the VIX futures, but the VIX came down to catch up with that. And then after that, price didn't go anywhere in the market. And so everything just kept falling together in tandem. Now that they're together, they can move. We are at some support here. Does that mean it couldn't go down further? No, but it's a setup. We have our setup, inverse head and shoulder, and I think this starts moving. Deeply oversold. The slow stoke got the positive divergence in the last couple hours. and we're looking for a buy signal there. And then the MACD should start to curl over. Histogram's not green yet, but should start to see this curling over really quick. Can it go down just a little bit more? Absolutely. You know, you have wicks. This is all over the place, the VIX. Could it spike through here and Monday just go up a little bit higher, like I was talking about on SPY, go a little bit higher, and this go a little bit lower? Absolutely. But, I mean, it's just imminent. Day 2, that's nothing in the scheme of things, okay? That's our story, and we're sticking to it. I hope this is more educational. Hope people can get some good points of view here and use your trading style, and maybe compare this analysis with many others, including the guy in the Discord. He probably has some great things on his style to offer. All right. So thanks for joining us here at Options Center. Don't forget to like the video and subscribe. We'll talk to you later.